The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, welcome to tonight's webinar. We've got John Attridge telling us about alternative currencies. I've known John for many years and he is a true expert on this subject. And he's also the founder of BBX, the Bank of Exchange. And I'll just change over now presenters to John so that he can explain a little bit more. Okay, John, it's over to you.
Thanks, Steve. I assume everybody can hear me okay. There's a little chat button there if anybody got any questions. Steve, is the vocal coming through okay?
Yes, it is, yes.
Okay, cool. So if anybody's got any questions during the course of the presentation this evening, if you just put them in the little chat box down there, and we'll either answer them as we go or I'll note them if appropriate for later in the presentation if I'm going to be covering something about that later in the call. So if you just use that little facility there. Okay, so we're going to be talking tonight about a whole series of different currencies that you may not be familiar with. The purpose of tonight is to give you a little bit of background as to what some of these currencies are, what they look like, how they operate, as well as the accounting treatment of them. The main two reasons, I guess, that you would want to know about these things is that your own accounting practice, if that's indeed what you are, or finance company of some kind, you will start to run across them if you haven't already in the marketplace, and rather than not knowing what they do, you'll at least have a basic idea of what they do. The other important thing to understand is that your customers may be asking you questions on how to treat some of these currencies from the non-fiat. Fiat, F-I-A-T, being pounds sterling here in the UK. So if you hear me refer to non-fiat or fiat, that's what I'm talking about. So I'm going to divide the presentation tonight up into a few categories, and as you can see some of the logos, we're going to talk about some cryptos, we're going to talk about some complementary currencies, some local currencies. They can take some basic different definitions. So if I can just start off here, if I can work this correctly. Who am I? Well, as you can see from that, you have my ugly mug on the front of it. I'm originally from Australia, as you probably guessed by the accent, even though I'm based in Bournemouth here since 2006. I'm the founder and CEO of BBX UK. We're a complementary currency platform. Here in the UK, we operate in 14 countries. We have about 100,000 clients about the place, and I'll cover that in a little more detail later on. I also enjoy cricket and am a contracted umpire to the ECB, covering the local Premier Leagues, the minor counties and the first class second 11 competitions here in the UK. So anybody who wants to catch up with me afterwards on talking cricket, I'm more than happy to get into that as well. So I've been involved in the complementary currency business since the 19th of September 1988. Started in Queensland in Australia, and I've worked with platforms, I've founded platforms, I've grown them, sold them, given advice around the world on how they operate. I'm a current affiliate of the International Reciprocal Trade Association, which is a body of over 600 platforms around the world that meet every period and discuss changes in the marketplace and how we operate. We've got our next meeting in Cancun coming up in a couple of weeks' time, so we get the latest developments on what's going on around the world. Enough of me. The first one that we're going to talk about is cryptocurrencies. Some of these that you'll run across things like Bitcoin, Ripple. There's quite a few others floating around. Bitcoin's probably the best known one. It was the first, and there are some differences between cryptos. I'm just going to play a little short video initially on it. It'll give you a basic understanding. I really apologise if people are truly understanding of how these operate, but I'm just trying to do this session on the lowest common denominator, assuming that you may not have come across some of these before. So if I bore some people, I apologise up front, and we'll play this. So this is just a short explanation of what cryptocurrency, in particular Bitcoin, does. So just bear with me.
Imagine for a second that you are in charge of the task of inventing money, but you get this task today, not in the 12th century when money was initially invented. You're basically asked to find a way for people to exchange an agreed value between one another. I know it's hard, but try to think. If this was done today, would we really be using metal coins and paper for this? Perhaps we can find a better way? What if we wrote down somewhere, maybe in an electronic ledger, what value each person has? This way, we can keep track of how much value each person can spend. So if I, for example, do some work for you, you would probably give me some of your value in exchange. Let's name this value Bitcoin. But how will people be defined in this ledger? I mean, how will someone send me value or Bitcoins? I guess we will have to give each person a unique identifier or address. We will keep track of which address or person holds which value. These addresses are known as wallets. So we've decided to write down in our ledger which address or wallet holds which amount of value. This ledger is called the blockchain, and it keeps all of the transactions from the beginning of time. Now it's time to make sure that everyone follows the rules. How can we do this? How can we ensure that no one cheats and says that their address has more value than what they actually own? I know. We'll spread this ledger around to tens of thousands of people, so whenever someone wants to transfer some of his value in order to get something, we can check to see if his story adds up to what everyone else thinks. If he's good for his value, we will let him spend it. But why would these people want to carry this ledger on their computer, and who has time to verify all of this each time a transaction is made? Well, what if we rewarded people who did this with value? Hence, the miners were born. Tens of thousands of people who get paid in Bitcoins for going through the ledger, making sure that everything is in order and that no one is cheating, including themselves. We've just invented a modern solution for money, and that's exactly what Bitcoin is, a digital, decentralized currency. For more information, visit 99bitcoins.com, a non-technical blog about Bitcoin and cryptocurrency.
Okay, I hope that explained to a little degree what we're talking about with Bitcoin. If I can just move my, just bear with me just a second. There we go. So that's the actual concept of Bitcoin. It's an encrypted currency that's mined by a set of computers and people that are setting up computer banks to verify and authenticate transactions. Once that process has been done by the blockchain technology, then the transaction is legitimized and therefore then processed. So for accounting purposes, there's a couple of questions that Bitcoin and cryptocurrencies raise. The first one is, how do you treat VAT and corporations tax? Well, there's been a couple of rulings and some updates, although this is a little bit of a moving conveyor belt. But Customs and Revenue under Brief 9 back in 2014 have made a ruling, and most of this ruling has been supported by a recent European Court of Justice ruling last year. So this is where we're sitting with this. How this ruling may or may not change due to Brexit is still anyone's guess, but for the purpose of this evening and for the purpose of current accounting instruction, we are moving with the fact that we are still in the European Union. So in essence what that means is that if you're a miner of bitcoins, then that is the person who's verifying the transactions and therefore creating them. There is no VAT on mining activity. That's the simple rule. There will be normal VAT for sellers of goods and services. So if you're accepting Bitcoin, Ripple or what have you, cryptos, then as you make a sale, that will go through your sales ledger and incur VAT as normal. It's purely another method of payment. There is no VAT for the exchange of Bitcoin. So with Bitcoins they go into these wallets, and then at various times you can turn those Bitcoins back into fiat currency. I started the thing by saying fiat here in the UK is pound sterling, and there is no VAT on that transaction. For corporations tax, they're treated like foreign currency transactions. So however you instruct your customer now on the treatment of foreign currency should be the way that you treat cryptocurrency transactions. So I hope that's clear. If there's any issues with that, I'm happy to help with any questions. So on this presentation, Raj, you've asked if you'll get a copy of the presentation. Yes, you certainly will. Steve, the moderator, will send a Dropbox of it. There's a little code that I've gone through here, some of the similarities between Bitcoin and Ripple. In essence, they're both cryptos. They both operate under similar ideologies, but they do have some different methods of operating. It depends on which side of the fence that you sit on as to which is better, or if they're both the same. I'm not getting into that debate tonight. I'm just simply pointing out that they are about. You will have customers that have them in their wallets, and if they're declaring them as revenue, how to treat them. So there's a little thing here on similarities and differences. I won't bore you with all the text, but as I say, you will be sent this presentation as an edited form, so you can go through it in your own time. Those people that want to talk to me separately afterwards, I'm more than happy, or at some point in the future through Steve, to answer any questions. So here in the UK, just as I say, a summary is that HMRC announced that Bitcoin and other cryptos, they'll be treated just like a foreign currency. For corporations tax, and exchange gains will be taxes and losses will be deductible, very similar to the same system that you're already operating from. So there's no mystery or magic to any of this. It's basically the separation of VAT being exempt for miners, that is the people that are creating the currency, and no VAT when you actually exchange the currency for fiat currency, just like you would if you're turning pound sterling into euros. There's no VAT on those transactions. So that's pretty much what I wanted to cover on here. There are some differences. There's some VAT stuff. I've edited all in rulings there. So if you want to plough through that in more detail with some stuff that you want to back up with, then feel free to do so. The next area of currencies that you'll find are local currencies, and for those of you particularly here in the UK, we've got a proliferation of local currencies. We have things like the Bristol pound, Totnes pound, there's Brixton pound, there's an Exeter pound, all sorts of different things. And again, on the presentation I've got some FAQs there that you could click on, and it'll take you through. In essence, a local currency makes the assumption that you would, if you're a local trader, and let's take Bristol for example, that you want to keep currency floating around in a local area to help economic prosperity in that particular local area. With fiat currency, you can either earn it or spend it anywhere in the world, and therefore what happens is that some areas become richer and some areas become poorer. I won't bore you on the banking system because that's another topic, but in essence, as an example for this, there are 63 individuals throughout the world that have 50% of the world's currency. And these individuals, obviously being the super wealthy, have taken a lot of the money away from the rest of the 9.5 billion of us that own the rest of the other half of the currency floating around. So what happens is that currency goes away in blocks, and therefore some areas become richer and some areas are poorer. So the idea behind the local currency is that that you keep the currency in the town that you, or the district that you operate from. So for instance, in Bristol, you can go to the post office, and if you're a merchant there, you can hand over fiat money, pounds sterling, and in return take Bristol pounds. You can then take those Bristol pounds and go to the butcher, the baker and the candlestick maker, and then in turn it's hoped that the butcher, the baker, the candlestick maker will then go and shop locally by buying other goods and services that they need using their Bristol pounds as the method or vehicle for transmitting exchange. With the Bristol or local currencies, you can at any time, should you wish to, take your Bristol pounds down to the post office again and exchange them one-to-one with no fee for fiat pound sterling currency again. The only sad thing about that is that once you do that, you're then taking the local currency out of its local environment. The taxation treatment and VAT treatment for local currencies are exactly the same as that if you would be accounting for cash on hand in any business that has assets of cash at bank. So they will have a list of or a summary of Bristol pounds. So at the end of an accounting period, if they had 100 Bristol pounds in their possession, it would simply account as petty cash or cash on hand. Any increase would be taxable, and so they're virtually treated exactly like that you would any sterling. So if you're conducting business via this, it'll go through your sales ledgers and expenses ledger, so it'll also incur VAT as you make a sale if applicable, and if you buy things using local currency, you'll get a VAT credit and a tax deduction if applicable. So that should be fairly simple. Then we've got community currencies. So community currencies are sometimes known as LETs. These are local trading systems, and these are more like time banks. So if you have someone who's good at knitting and someone who does a little bit of door painting and someone who wants to do some dog walking, then rather than pay for services as such and be rewarded, there is a credit in hours. So an hour's dog walking is equal to an hour's knitting. And provided these are at a hobby level, then and not your main business, then there's usually exempt from any form of VAT or taxation. So if you had some people with some time bank hours, then under normal circumstances they won't accrue either VAT or any income tax liability. The next section we've come to is complementary currencies, and that's where I operate with BBX. There's, as I say, an estimated 600 of these currencies that are running around operation globally. There's a couple here in the UK, and they come in a couple of forms. One is what we call a retail complementary currency platform, which is aimed at the small to medium-sized business market. And then there's what we call corporate trading entities, and these trade blocks of inventory mainly for media. And the typical deals are, you know, $500,000 plus, whereas the retail environment, which is probably most of the clients that you'll be operating with in small to medium-sized businesses, you may come across them sometimes using a complementary currency. So a complementary currency works similar to a bank account, but instead of banking fiat currency, the complementary pound is used as a unit of exchange. So in BBX we call it BBX money, and ruling IT 2668, which is an Australian ruling that applies here in the UK, is the reference for accounting, taxation and every other purpose that says that one complementary pound equals £1 sterling and should be accounted for as such. So complementary pounds are earned by businesses selling spare capacity at prevailing prices, but unlike fiat banks, there are no fractional reserves, as it's a pure debit zero system, and I'll demonstrate that just in a moment. So how a complementary currency platform works is that you open up an account on the platform, and for this example we have a restaurant here, and we have a painter, an accountant, and a hotel, and a marketing company. When a business opens up an account on the complementary currency platform, according to its credit worthiness, they're issued an interest-free credit facility which enables them with a zero balance to go and make a purchase up to that credit limit, just like a normal credit or debit card, but unlike a credit card there is no interest and you repay with future spare capacity. So in this particular example, that credit line can be from £1 to £100,000, and again that's interest free. So in this example, the restaurant finds the hotel on the platform, and we do this via a directory that's online and through an app, and decides to spend one night in the hotel. So they book in under the normal way, and 100 BBX pounds is taken from the restaurant's account and put into the hotel's BBX account. A painter on the platform decides that 3 nights is a better stay, so they come and stay for 3 nights, and 300 BBX pounds is taken from their painting account and again put into the hotels. And then you accountants, you've been working so hard during the course of the year that you're going to have a week there, and so £700 comes from your accounting account with the complementary platform and put into the hotel. So you can see from all that the hotel now has sold what would have been unsold rooms. So if he doesn't sell the rooms, they're worth nothing, and now has £1,100 of complementary currency in addition to their prevailing fiat currency bank account from the sale of their existing activities. Now, from the hotel's perspective, that £1,100 would be both VAT applicable, if applicable, and certainly for corporations tax come as a normal taxable event. For the accountant, if it was for leisure, the painter and the restaurant, if it was for leisure purposes, the stay, then of course it would not be a tax deduction, nor would you get a VAT credit. However, if the stay in the hotel was a part of a business trip, then you would get both a VAT credit and a tax deduction. So the hotel now has got 1,100, and it decides that the best use of this newfound currency is to undertake a marketing campaign. So the hotelier now buys £1,100 worth of marketing. So that £1,100 transfers from the hotel's BBX account or the complementary currency account into the marketing account. Now, because that's a marketing expense, the hotel then would claim that as both a VAT credit, if applicable, and certainly as a tax deduction. So the net result of that is that they've taken on £1,100 worth of business, which is attracted both VAT and income tax, and offset that against this particular expense. So the net result is their BBX account is zero, but also is their tax and VAT obligation. So some accountants out there are getting this mixed up, and we have reports back from some of our customers that that the accountant is not allowing tax deductions or VAT credits for this legitimate purpose, and I can assure you that that you are misinforming your clients if that's the information that you're giving them. Now, the end result of this is now that the marketeer has had £1,100 worth of new currency, and if they are VAT registered, that of course will represent at that moment in time both a VAT and a taxation liability, so to the marketing company. But again, when they spend that £1,100, if it's on a business related and a VAT claimable expense, they will get a credit back. If it's on a personal expenditure, they won't. But that's exactly how you would treat it if personally through your director's drawings account. So the complementary currency works exactly through the director's drawings account, so you treat the transaction just as you would a fiat currency. So that pretty much finishes. I don't want to bore too many people. That pretty much finishes what I wanted to cover. So if there are any questions, certainly I'd like to give anybody an opportunity of asking them now. If not, I'll hand back to Steve, and you may have some questions, Steve, or anything that you want to add.
Okay, thanks, John. Let's see if anybody types in any questions just for a moment there and see what they come up with. How many members do you have in BBX at the moment, John?
There's just on 100,000, of which there's about 3,000 here in the UK.
Very good, very good.
So the average customer trades about £1,300 worth of spare capacity a month, Steve.
Yeah.
That'll give us an idea, and we never know who's going to be above, below or average, but most businesses will have that type of spare capacity hanging around in their business that's unmonetised.
Is there a particular sector that has embraced BBX more than others?
Oddly enough, if you look at our platform globally, we've got 1,011, I think it is, verticals, and the most popular category other than business services is accounting. So across the board, the range of types of businesses from like hotels, restaurants, marketing companies, all forms of tradespeople, all forms of retailers, wholesalers, mechanics, garages, it's just whatever you'd normally see in the old yell.com pages is pretty much what is in our directory, but on an SME level. So when people ask me what sort of businesses are participating in these schemes, I ask the question, can you buy the service from an SME type business? So can you buy petrol from an SME company? The answer is probably no. There's no SMEs that sell petrol, so you won't see companies like that. But you will see, can I buy candles from an SME company? Can I buy accounting or advertising? Yes, I can. So that's the litmus test.
Okay, we're starting to get one or two questions typed in now. Raj has asked a question which I think you probably already covered, which is this legal tender?
Yes, it is, Raj. According to IT 2668, a complementary currency pound is equal in value, should be accounted for as such. By legal tender, it is acceptable by anybody in the currency community. So can I exchange this for fiat currency directly? The answer is no, but there are 17 indirect ways that you can turn a complementary currency into fiat currency, if that answers your question.
That's good, because that also covers the question that Michael asked as well, which was how are the exchange rates to fiat currencies determined? So
yes, that's a good question. So when you buy goods and services, if the restaurant stay is normally £100 and that's in sterling, then that's the rate that the person paying with their BBX complementary currency would pay. That's it's fair, prevailing, non-discounted rates. If the seller wishes to offer a discount and passes that to a BBX or a complementary currency customer, then that's completely fine. So the short answer is, whatever you pay on the menu price is for sterling fiat is what you would pay with complementary currency money.
Raj says, if you were using one of these currencies, could somebody refuse to accept it?
Absolutely. Just like they could, if you took pound sterling and took it over to Belgium, then they probably would refuse to accept it.
Okay, that's good. No other questions at the moment. Okay, what is the of BBX and the other types of currencies? Which one would you say? How does it sort of compare to the others in terms of size? I mean, is Bitcoin is presumably bigger than BBX, is it? Or
that's hard to say, Steve, because Bitcoin's so secretive is probably not the right word, but nobody knows the identity of everybody that holds a Bitcoin wallet. All I know with Bitcoin is that there's a finite amount of Bitcoins equivalent into US dollars of 24 billion US dollars. So that'll be the maximum amount of circulation of Bitcoins globally. So as more people have Bitcoins, instead of holding one Bitcoin, you'll hold 1/100th or 1/1000th or 1/10,000th of a Bitcoin, if that makes sense.
Yeah, well, that's good.
So the idea with Bitcoin is that there is a finite amount of currency created ever, which the theory behind that is that it maintains it as a stable currency, which is unlike the fiat world that we know of today. Just as an aside, many people don't know that only 3% of fiat currency around the world is actually minted by a bank in notes and coins. 97% of it is created by loans for real estate and speculative adventures, as well as personal loans and business loans. The breakdown of that last year was that 54% of all currency created, this is the 97%, went into real estate, in mortgages and so forth. 30% went to speculative natured things like hedge funds trading and futures trading and whatnot. 8% went to personal loans, that's individuals, and 8% went to businesses. So the sad thing about the fiat currency world is that there's no backing of the currency or the creation of the currency. So a bank can create currency out of thin air and lend it out, but there's no backing of a deposit. When banks started in 1694, there was a requirement from the lenders to have 50 pence worth of gold for every pound worth of loan. That is now zero throughout the world. There's no statutory requirement for any bank to hold any reserves, and we've already seen in Greece and Cyprus the consequence of that. With a complementary currency, it might be worth noting that if you saw before that every time there was a purchase, i.e. someone was borrowing from the platform, there was a corresponding exact amount going into the seller's account. So if you added up our 100,000 customers, Steve, globally, and added up all the people in credit, it will equal all the people in debit to the penny. So we've got 100% backing. There's no fractional reserves in a complementary currency platform.
If one of our accountants wanted to join BBX, what would be the process and how would you recommend they promoted it to their client base?
Okay, there's probably two things they can do if the accountant themselves were looking for extra business to fill any spare capacity, and the litmus test for that is if I knocked on your door today and said, can you do my books? You say, no, I'm too busy, then there wouldn't be room to play personally. But if you were taking on clients, then any accounting firm that can turn spare capacity into value without increasing fixed cost, that's pretty much a no-brainer, because there's a whole lot of things that the accounting firm could offset using the newfound revenue. But then there's another thing to play with, is that the accountant's customers, if they have spare capacity in their business, then one of the advice aspects of this, Steve, is that if, for instance, the accountant had that hotel as an example, and that hotel had some rooms that were being unsold, they could mention to the hotel, look, there's another thing that I've come across that helps sell otherwise empty rooms. If the accountant does that, then the hotel would appreciate the advice, like any good advice from your accountant. But we also have on BBX a ambassador program where of the fee that we get paid, and we get paid a fee every time someone banks some spare capacity, and that can be from 6.5% to 15%, and that's in fiat money. The introducer can get up to 20% of that. Okay,
that's good. And do you sort of guarantee to fill people's spare capacity? Are you in a position to be able to sort of fill any amount of unused capacity that people might have? How does that work?
Yeah, no guarantees, Steve. It's not like death and taxes. All I would say on that is that when someone like the hotel was offering its service, we promote it to the best of our ability. But if we don't sell any spare capacity, then we don't make any fee. So the incentive certainly lies in our network. We have both online directories as well as physical account managers that promote the spare capacity opportunity of every business that we work with. But if we don't succeed in selling spare capacity, we don't get paid. So there's always a good motivation to do as best a job as we can.
And if somebody wants to buy a service that is with an SME but isn't one in your network, how do they suggest people that might join, or do you seek out services that they could buy, or how does that work?
Yeah, exactly. I'll give you an example. It happened last week. We had a carpet cleaner in the system that was up nearly to the extent of their interest-free credit line, and they were struggling to try and earn some BBX money to service their spending habit. They'd put a quote in to a local hotel to clean the carpets in the rooms on a yearly basis, and the quote was $30,000. The hotelier had a competitive quote from another cleaner at 20, who wanted the work desperately, who had discounted the value of the year's contract down to $26,000. I was able to contact the hotel and say, look, I've got a way of decreasing that cleaning quote. We went and talked to them with the cleaner. We explained that if the hotel became part of BBX and we gave it a credit line to do the cleaning during the course of the year, it would have £30,000 worth of cleaning with no physical fiat money outlay. When it repaid by selling spare capacity, and this hotel had £30,000 worth of spare capacity opportunity, then the only cost is, as people stay in the room, is a squirt of shampoo, bar of soap, the bacon and egg for breakfast, and the cleaning of the room plus my fee. That roughly equated to about 20% of the transaction. So 30 grand's worth of hotel costed about 6. So the net result was, using our interest-free credit line, was that the hotel was able to get its carpet cleaning for effectively £6,000 in fiat money, which was the cost of operating the complementary currency platform. So I know that probably sounds like a mouthful, but at the end of the day, the hotel got 30 grand's worth of business at a cost of around 6 to acquire, which would have otherwise been spare capacity because no fixed cost rose. It got its carpets cleaned for the year, with even cheaper than the 26 grand quote, so it saved 20 grand in cash and got 30 grand's worth of new customers, and the carpet guy got 30 grand's worth of new business.
That's good, that's good. If somebody was in BBX, do they have to do a certain amount of trading? Is there some sort of rule that says you must do so much a year through your BBX account, or anything?
No, there's no compulsion, there's no contracts, there's what have you, so you can take on as much or as little business as that you have. All I'd say is if you've got spare capacity, particularly if you're someone like an accountant, we call that perishable revenue, because if you don't create revenue by looking after a new customer today and you have the space to do so, you can never go back next month and get last month's accounting fees on a client that you didn't have. So it's not like a pair of shoes that sits on the shelf till tomorrow.
No.
So we work with every business to do as much or as little business as they're comfortable with, and what we can create. As I've said before, there's no guarantee. So all I'm saying is the average customer does about $1,300 a month, so about 15 grand a year in additional business.
That's good. I'm sure everybody would love that extra business. So that's good.
Yeah. And we have people that do very little, but we also have people that do hundreds of thousands of pounds a year too. So it's usually up to the individual, Steve, if they're prepared to work with us and spend time. It's just like anything else. If you put your hand behind your head and expect everything to happen for you, then it probably won't. But if you want to work with us, then there's a better chance of success.
And do you advertise? Can they, if somebody was in BBX, can they be promoted to other BBX members? Do you have like some sort of advertising, or some sort of directories that go out to people, or some sort of extra listings, all that kind of stuff? How do they promote it?
We save the planet. Nothing's done in paper. It's all done online. We have an online app that advertises it. We have emails, SMS messages. We have an online directory, and we have a thinking, living, breathing account manager network that gets to know all their clients. Each account manager looks after about 100 clients, and they get to tell all their counterparts about the customers that they existingly have, and then promote that spare capacity opportunity on a daily basis. Bear in mind that spare capacity is a moving conveyor belt. So a hotel, for instance, which is a great example, most of our hotels here in Bournemouth, which is where our national office is, haven't had much, if any, spare capacity over the course of July, August. But that said, we've still had people stay using their BBX money because they do have some spare capacity. But as soon as school holidays finishes, in a couple of weeks' time, they'll have so much spare capacity they won't know what to do with it. So when that happens, we'll have promotions going out, encouraging people that have been busy during the school holiday period to come and have a breakdown in Bournemouth.
How do you actually process a BBX payment? Is it by SMS or is it on some computer system, or how are the actual transactions processed?
Yeah, we've got a secure platform that you can either process it online. Everybody has their own trading card, which has a 16-digit ID number and a 4-digit access code. So we also have an app that every seller is loaded up with for free to help them process a transaction. So the buyer just presents a card, which is just like a normal debit or credit card, which has that 16-digit number on. That number is entered into the app or online. The amount of the transaction, you hit send. Both the buyer and the seller get an instantaneous acknowledgement that the transaction has taken place. If both parties then logged on to their online banking account, which is their own account like you would with online banking, it would show the seller having a credit to their account and the buyer having a debit. So it looks, feels, tastes and touch exactly like if you bank with HSBC and you're familiar with online banking, our bank accounts look exactly the same.
That's good. Okay, I think that's probably all my questions for the moment, John, and I don't think... yeah, no, I think we've covered the questions. And there's one about Bitcoin here, but we've covered that already, I think. So I think that's probably all the questions for now. Really appreciate...
Steve, I'll whiz the précis of the presentation up for further detail, and people can certainly contact me through you.
Yeah.
Or I can. You've got my email address.
Yeah.
So if they want to contact me for further questions for either themselves or their customers, then I'm more than happy to do my best to answer any questions they may have.
Yeah, no, that's fantastic. Really appreciate that, John. And it's been a very interesting webinar this evening, and we really appreciate you doing it for us and for being a sponsor of the association as well. Thank you very much.
More than welcome. It's been my pleasure.
Okay, thanks.
Take care.
Good night, everybody. I'm just going to stop recording now and turn off the presentation.